Alrighty guys, welcome to a new video. In today's video, I thought I'd break down this trade that I took this morning. This is one contract during the Asian session. Really nice trade, over a 1 to 2 risk to reward, but I'm going to break down the exact steps, the analysis, how I came to formulate my bias, and really how you can use the most simplistic concepts. ICT concepts, liquidity, macros, inversion, fair value gaps, low resistance liquidity, all these things alongside market structure allowed me to take this trade. With that being said, guys, let's get into the video. Now, the first step to identifying how to take a trade like this is to start with the higher time frame. For me, as you guys know, the higher time frame is the 15-minute chart. Now, before we get into the higher time frame chart, go and check out my X. I'm going to post breakdowns here pretty much every day of trades that I take. With that being said, guys, let's get back into the charts. Alrighty, so we're on the 15-minute chart. You can see it at the top here. This here is a funded account. It's a starter with my funded futures. Now, ultimately, we can see the market is trending up. We are extremely bullish. Even looking back from the New York session, you can see yesterday, price came down here, and then from about 6 o'clock, you can see how price moved up and up and up and up, forming higher highs, higher lows, and respecting the bullish fair value gaps. That's important. So we can see price here is respecting all these bullish fair value gaps. I'm going to mark these out. That's a bullish gap. We come back into that. We push higher. What do you think I'm expecting as price trades into this bullish gap? We push higher. And the same thing happens right here. Again, another really good trade over here. You can see price trades into that 15-minute gap and price pushes higher. So the first thing to identify when you're looking at these types of setups, and if you want to use this framework for trend continuations, you need to have the overall trend in play. We can see that it's bullish. Step number one. Step number two, you identify these fair value gaps in the market and looking for the price to come and trade back into those fair value gaps. That's step number two. So you start with a 15-minute chart and then you go back down onto the 1-minute chart like this. So I'm going to illustrate this for you guys here. Now, this here was actually quite a good trade, not in a macro. If we go back to the earlier portion of the day, you can see exactly the same thing here. Accumulation, manipulation, distribution, accumulation, manipulation, distribution, accumulation, manipulation, distribution. These things will repeat in the market. You're going to see power 3 repeat. You're going to see price find support and resistance at these 15-minute fair value gaps. You honestly do not need a higher time frame than that. Even if you're trading the New York session, PM session, Asian session, London session, 15-minute fair value gaps, 1-minute liquidity, 1-minute inverse, and the macro. That's all you need. Now, going into the 1-minute chart, this here is that 15-minute FVG. And what I want you guys to notice and reflect on is what happens in price from here moving down. You can see from here moving down, we form 1, 2, 3 swing highs. So these swing highs are buy side liquidity points. Write that down, note that down, buy side liquidity points. The thing I want to point out is that these are just not any buy side liquidity points. These are low resistance or trend line liquidity points. And you might ask, well, what's the difference between normal liquidity and trend line? Here you can see that's forming a trend line. That's trend line liquidity. Relative equal highs, and these forms of liquidity often get taken out very quick, very, very quick. So you can see here, trend line liquidity, we sweep that. Trend line liquidity, we sweep that. Trend line liquidity, we sweep that. And this is the type of framework, or these are the types of liquidity that I'm looking for. And this is the trend continuation model. So a lot of people say, how do you take trend continuations? I'm really good at reversals, Ruben, but how do you take continuations of the market? And this is exactly how I do it. I look at the high time frame narrative like we did, 15-minute chart. We determine that we're bullish. We determine that price has been respecting 15-minute fair value gaps. Easy. Wait for price to trade back into it. Wait for low resistance to be generated on the buy side. And then all you need to look for, ideally, is a macro entry and an inversion fair value gap. That is the final step, the piece of the puzzle, which we'll get into right now. Now, if you're curious as to what macros are, they exist 10 minutes before and 10 minutes after every single hour. So for example, we've got one here from 7:50 to 8:10. What are the best macros? The best macros are those that line up with market structure, as I'm showing here. So you can see this macro here, price comes down and we sweep this level of sell side. I'm going to mark that out in red, number one. Number two, we actually create this inversion fair value gap here, but I missed this entry. So you'll see my entry here comes a little bit later. I don't take this entry. I wait for a little bit more in terms of market structure. And I'm waiting for price to close above these down close candles, these three here. These three down close candles, when price closes above those, we form what's called a change in the state of delivery. That's my entry, right? You can see that. So my entry comes from here. Boom. Stop loss goes, where do you think? Below these bodies, either here or here, right? And then all I'm doing is I'm targeting these highs or this high. Essentially, with a stop loss like that, it's over a 1 to 2 risk to reward. Originally, my stop was like this, and then I moved my stop loss up here very quickly. And you can see what happens in this macro. We have a downtrend, and that downtrend turns into an uptrend. Very simple things to look at when you're looking at ICT macros. Reversals, pivots, trend continuations, and using this framework to take a trade. Now, this framework was called out live to my premium members for the Asian session. You can see here I mentioned that I'm curious to see if we have a similar framework to yesterday, stepping down for them price to spool higher. Exactly what happened, exactly what I took, and taking these trades inside of the macro. Now, if you're not yet in the free Discord, really good checklist here for you guys if you're new to the channel. And this checklist will take you through how I siphon out a good setup from a bad setup completely free. A lot of people like this and I've been using this, and I would encourage you to check it out because this will allow you to take high quality trades. With that being said, let's get back into the charts and let's finalize this video and come to the concluding remarks. Let's get into it. So if I was to summarize this trade, what were the confirmations I used to enter this trade? Well, number one, we've got low resistance liquidity. Number two, we're delivering from a higher time frame fair value gap. Number three, we've got a macro. Number four, we've got an inverse fair value gap. And number five, we've also got a CISD. All these things, guys, if you look for these things and you be patient, you wait for these setups, you can hold these trades. You can feel confident that these trades will run and run quicker. You can also scale into these positions and you can see how quickly price moves from where I entered to where I exited. Very quick. And why is it the case? Because this is what people call a low resistance liquidity run. And this is what I've been teaching for months and pretty much for years, right? This system and this model. I do not take trend continuations if there isn't enough of a pullback. I don't do that. I don't take trend continuations. Like for example, I don't take these. I don't take a pullback and then trade higher or pull back and trade higher. I don't do that. That's not my model. I couldn't care less if price runs. I'm waiting for a more extensive retracement like this or like this, because for me, now there's guaranteed liquidity on the buy side that I can target. And for me, that is the best way to take these continuations. Now, to conclude this video, I thought I'd go through these 5 flashcards with you guys to talk through the different types of pullbacks and the ones that I prefer to take for trend continuation. So I've segregated them in 2 aspects. Number one, we've got what I call the low resistance pullback, right? And that low resistance pullback is what I showed you today. Number 2 is called the sharp pullback. Now, the sharp pullback I'm not interested in. And examples of that could be seen like back here, where price just pulls back sharply and moves up. I'm not interested in that. It's not my model. I don't have to take that. Each to their own. If it suits your style, if it suits your model, go for it. But for me, I don't engage that way. Second thing, a low resistance pullback is the best type of pullback because with a sharp pullback, there's not that much liquidity, right? And yes, price might move higher, fair enough. But a lot of the time you can get caught in chop in these pullbacks. Whereas in these type of pullbacks, the low resistance ones, especially when they develop from a high time frame fair value gap, you can kind of be confident, especially with a macro, that they're going to spool and go right towards buy side. And that's exactly what I posted about here on my Twitter, right? So yesterday, August 5th, or 2 days ago, I should say, I took this trade during the Asian session, exactly the same framework, 5-minute, 15-minute gap. We pull back, we have low resistance, and the same trade I pretty much took today, except a different day. You can see the framework remains the same. So these are the types of setups I'd recommend to consider for trend continuations. If this video helped you, feel free to leave a comment below and a like below. And if you haven't heard, I am now an affiliate with My Fund Futures. Really happy about this because I've been using this prop firm now for over 12 months. Payouts super fast. So if you want to support the channel with no extra cost to you, the link to that will be in the description below. But with that being said, guys, I appreciate all the support. And until next time, all the best. Have a great trading week. Peace.